Hi guys, so I'm Lauren DiMartino and I'm here with Ron today through Healthy Neighborhoods. And Ron is actually going to go over some of the benefits of using the Healthy Neighborhoods program. So, Ron, so tell me your
Sure.
baseline.
Well, my name is Ron Barnes. I direct the loan pools here at Healthy Neighborhoods. We are an organization that's been around since around 2002. We've probably helped about 1,000 clients.
Wow.
And basically, we target middle-income neighborhoods in Baltimore City.
Okay.
We're not in the most affluent neighborhoods, but on the other end, we're not in the most challenged.
Okay.
We're in the middle, healthy neighborhoods that without a little investment might fall from being healthy and being challenged. And of course, the upper end doesn't really, they have their own mechanisms. And we identify them on our website because all of the products we offer target those middle income neighborhoods.
Okay.
We have the ability to help them purchase and rehab a property. As a realtor, you've probably heard of the 203K FHA.
Yes.
We're like that, but we're not FHA. We're a nonprofit.
Okay.
We have a refinance rehab, so you may already own your home and want to refinance it and rehab it in the same loan.
Yes.
And then some people just want a home improvement loan. All of them are mortgages, but they are in second position if it's the home improvement loan,
Okay.
or first position if it's a purchase or a refi. And all three of them also feature up to a $10,000 matching grant to help incentivize the renovations.
Wow.
The grant is a loan.
Okay.
It's secured against the property,
Okay.
but it has no payment, it has no interest rate. It just has a 5-year residency requirement.
Okay.
So as long as they don't sell the house for 5 years, as long as they don't cash out, refinance the house for 5 years, as long as they don't move away and rent it to someone else for 5 years, the grant burns off the day after the 5th anniversary.
Wow.
So, and by the way, you're a city resident, so you know there's some very aggressive other city programs.
Yes.
Like Live Near Your Work through Hopkins.
Yes.
Like the Baltimore City Employee Incentive.
And the vacant to
The vacant to value, just to name a few. Live Baltimore
Yes.
has an incentive. You're able with our program to stack as many incentives as you or your house that you select might be eligible for.
Okay.
We had a gentleman who bought in Patterson Park who took advantage of the Live Near Your Work program that Hopkins has, which is one of the very attractive ones.
Yes.
He also took advantage of another program that was called the NCI benefit. Long story short, he had about $50,000 of incentives that did not have to be paid back. Interestingly enough, he ended up doing that because the market moved. He wanted to refinance, and the value had improved so much
Yeah.
that it made sense, even though he had to pay a few dollars. So our product allows you to buy the house and renovate it in the same loan.
Okay.
It's a little bit of a misunderstanding, but it's kind of a shortcoming of what people think our program can do. Most people call us, and legitimately so, when they want to buy a house and the roof is leaking or the basement is, wet or something's wrong with the house, something that came up on the home inspection that the seller's not going to pay for, that they want to have done. So yes, our program does that, but that's not what it's limited to.
So you can actually be under contract for a home and then call you guys?
No, I'll come to that. I'll answer that a separate way. What I was trying to get at is that sometimes it's nothing wrong with the house.
Okay.
It's a kitchen, if I can make a joke, the circa 1960 pink, appliances, and everything works perfectly, but you want a new kitchen.
Yes.
Or you want a new bathroom, or you want a new deck. So in other words, it's not things that are broken only that we repair, which we can do. It could be something on a house that you're adding a deck, parking pad, garage, solar. The joke sounds like a joke that you're able to incorporate whatever renovation you can afford with one exception, and this is when it sounds like a joke, except an in-ground swimming pool. Anything but that can be done as long as your income affords it.
Okay.
And so sometimes it's because the house is broken and those things need to be done, but sometimes it's, I just want another bedroom, or I want another bathroom, or I want to finish the basement. I want to put in HVAC. I want to put in solar, you know.
Okay.
So any of those things are permissible. You said something I want to go back and visit, and
Sure.
that was, what were you saying just a second ago? It was
Being under contract. So using
yeah.
your program after you're under contract.
That's an interesting challenge. We don't have a preclusion to your doing that. The problem is if you're under contract, your seller is locked into a time frame and to a sales price, which if he's willing to bend that, yes, we have had people that have, in the middle of a contract, going to XYZ lender, decided they wanted to use us, but they typically needed to get more time from their seller. So if the seller permits it, remember you're under contract. And equally important to them as is the sales price, often is the time. And
So-
you know from coming out of this last year's market,
Yes.
you know, houses got sold sight unseen, money above list price, all kinds of, you know, quick sales. Doesn't really help for this kind of a program where there's a definite, this is 2 loans in one.
Yeah.
You know, this is, will take some time. It's not impossible. And sometimes you've got an amenable seller. We've had our fair share of, and you know this as a city resident, first right of refusal, someone renting a house they've lived in forever,
Yes.
and the seller's amenable to it and wants you to buy it and gives you the time to kind of get your renovation proposal together.
Yes.
Because to apply with us, you just can't have the contract of sale. You
Okay.
literally have to have the renovation proposal at the
Okay.
date of application, because you're applying for that amount.
So now that you speak about that portion, give me a rundown of what someone who is just freshly introduced to your program, what would they expect to go through? So we know that we have to have a renovation budget from the very beginning. What else? What are some other things?
Well, that's the biggest difference. I mean,
Okay.
in your regular world, all they've got to do is get a contract of sale between the seller, and they often get pre-approved for that, which we can do and I don't like that word in that example. I prefer pre-qualification.
Okay.
Because our number, whatever it ends up being, which is probably no different from what the loan officer that's just helping you with the sale would come up with, is that 2 things have to fit under that. It would be the sales price plus renovations and grant eligibility minus the grant. So as long as that sum of those 2 numbers is less than what you were pre-qualified for, pre-approved for, if you prefer that word, then it works.
Yes.
We're not looking for just I'm careful using the word estimate. I would rather say final estimate.
Okay.
Final invoice, final proposal. Because when you sit down with our loan officer, we're giving a copy of that renovation proposal to the appraiser, to the bank. Because our loan, like the 203K, allows you to borrow up to 110% of the after rehab value.
Okay.
So the appraiser incorporates what you're planning on doing
Wow.
in that appraisal. So appraisals, you know, run what, $400 or $500. So you don't give us a proposal and, oh, by the way, I want to change this. Well, he's already done it.
Yeah.
So you can spend another $500 if you want.
Yeah.
But you
We're not
see what
gonna
I'm
do
saying.
that.
That's why
Yeah.
you want to, when you sit down with our loan officer, you are actually, this is already in place. The other thing I would point out is that we, like the 203K, where there's an FHA inspector,
Yes.
we have an architect on retainer.
That's
Okay.
awesome.
Every transaction that we do gets reviewed by that architect for 2 things. I did not mention that we don't pick contractors for you. That's a
That's
conscious
actually
thought.
another
That's
question I
a
had.
thoughtful, strategic point, and I'll get into that a little bit more. I will make this
Okay.
point first and come back to that. So we don't pick the contractor. So part of what the gentleman's name is Tom Gamper, S&P Architects. They're well respected. They did the Hippodrome. They did the building that's right here at the corner of Reed and Charles. Anyway, he's checking for licensure to make sure they're in good standing with the MHIC. And he's checking for, I guess you could use the word reasonableness.
Yes.
If the quote is $100,000 to do 20 different things. Given Hamden in the neighborhood, is that reasonable given average square footage costs for that work to
Yes.
think that that's enough to cover the project being completed?
Absolutely.
We have seen where contractors have gotten started and then get you in the middle of the project and say, oh, by the way, it's going to be another $8,000.
Yeah.
Now, he can't prevent that happening 100% of the time, but he can greatly reduce that possibility. And one of the tools he uses would be, the bank doesn't like this word, but we like to refer to it as a contingency.
Okay.
They like to use the word holdback because contingency has some other internal meaning that
Yeah.
creates all kind of problems. But the bottom line is, if you thought you were going to do 100,000, maybe you should do 110 based on what Tom saw, because sometimes you just don't know when you're demolishing something to build something, what's
Absolutely.
behind what you got to tear down. And so the great ones are where they did have a contingency but didn't use it. You know, the scope of work, the contingency is above the cost of the scope of work.
So what happens to that? We'll say
Contingency, if he doesn't use it,
Yeah.
it's credited right back to the loan.
Oh,
it's
nice.
like when they talk about a project came in at budget.
Yeah,
well,
which
that's
never
your
happens.
which never
It never
well,
happens.
it does happen. I mean, sometimes, but you also are glad to have it when something blows up.
Yes,
figuratively
and something
speaking.
always blows
and
up.
something.
Always.
Well, you'd be surprised this year, the last 14 months. People talk about supply chain challenges.
Yes.
And that does happen, but that really hasn't been the problem as much. I think I had one case where they were redoing a kitchen, remodeling a kitchen, and the particular dishwasher they wanted was out of stock. And it's
Okay.
going to be 7 months to get it. Okay, that was one. The bigger problem we've had with contractors is just them being professional, showing up, giving you real numbers.
Yes.
I think the problem is during COVID, and we're coming out of it, so many people were doing renovations. These contractors have tons of business.
Absolutely.
And they'll blow you off in a minute.
Yes, or
And
they won't
don't,
show.
they'll make it sound like they're not blowing you off, but they show up when they show up.
Yeah,
And how
or they'll
dare
call
you,
you
because they
back.
know if you fire them,
There's
you got to
somebody
start
else.
over again.
Yeah.
So they have 5 other deals. We have a couple cases where people have fired their contractors and are suing them through the normal MHIC licensure piece, and have since found a new contractor to finish their jobs. These were big
Phenomenal.
6-figure transaction, Gwen Oak Avenue, lady's doing a $250,000 renovation.
Yeah.
And she, long story, but it's working. She's almost
Yeah.
there. It's taken a lot longer than she thought, but that wasn't her fault. It was the contractor's fault, basically. And again, all the contractors get reviewed on the front end, and there's no magic to it. I mean, it's kind of like it's good until it's not.
Yeah.
It's good until he doesn't show
absolutely.
up, until he just kind of stops coming. So,
Absolutely.
and then you would have never known. So it's always great if the person has a contractor they trust. Because literally, if you're firing your contractor, it's like a divorce.
Oh,
You
I
know,
understand.
because
yeah.
also this is your house, this is your home, privacy, security, quality of construction, all those things come into play, and sometimes these things disintegrate into feelings versus logic.
Yeah.
And sometimes you have to compromise because you just want this guy out of the house.
Yeah.
I'll move on, I'll get it done. I can say we're proud that we've never not completed a project, but there have been some that took
Challenges.
longer,
Yeah.
and there's some than ever anticipated, and some also because they wanted to get rid of that guy that kind of shouldn't even put a gender on it.
Yeah.
Got rid of the person by re-engineering their plans a little bit and saying, you know what, we can just stop here.
Yeah.
Remember, though, you have to be careful. If it's too big of an amount, the appraisal was based on these things being done. So it can't be substantive things that aren't.
Absolutely.
I mean, so that only works when you're almost at the end anyway, and there's not things that are structurally, substantively changing the value of the end product. Because that, in essence, is what our mission was. Unlike a lot of programs, we're here to make houses more valuable, and not because you throw up on a coat of paint, legitimate, real
foundational
value,
value.
right, curb appeal improvements The logic being, so many years ago, still true to a certain extent, but it's improved dramatically. You buy a house in a city, and 20 years later, it's not worth a whole lot more than what you paid for 20 years ago.
Yeah.
That same house in the county, you make some money.
Yeah.
Well, why shouldn't houses in the city appreciate similarly?
Yes.
And our philosophy was by doing substantive improvements to the house. That's why everything works except a swimming pool. Anything,
The swimming
including
pool doesn't
removing
add
trees,
value, yeah.
removing a tree in your, doing landscaping.
Yeah.
It's the piece of real estate that's more a parking pad, a garage.
Yeah.
It's solar. All those things
Absolutely.
add value, and that's why it's not a. In fact, I
Yeah.
think it's not even just us. I think the city might have some issues about zoning as relates to in-ground swimming pools, and not. And some of our neighborhoods are real home neighborhoods. That
Yeah.
obviously is not where that makes sense. And then some of them are more suburban. Howard Park is an example on the west side. Lauraville on the east side have large lots with single family detached homes that
With lots
don't
of
look that different. They
space,
have lots of, so you could have pools in those. So you see what I'm saying? It
Yeah,
is kind of, is how
absolutely.
it kind of works.
So on the website,
Sure.
this is also where if someone wanted to apply to use the program, is this where they would go to begin
Great
the application?
question. We intentionally do not have an application on our website.
Why
We
is
will not give you a link because we want you to talk about these things first.
Okay.
The perception is I can just apply and these things magically happen. And we're not letting you apply until you've worked through the renovation proposal.
Okay.
Remember I told you you had to
Yes.
have a renovation proposal to sit down and apply.
Okay.
Hence, if we had it up there,
Then-
where's my loan? Well,
Yeah.
you haven't done
Anything.
you haven't done anything to get the renovation proposal together. Because that is the harder part. If
So
I were to
someone
say a
wants
deal,
to apply, do they call you or?
they have to call me.
Okay.
Let
So
me
they
let me
speak
say a little bit
directly
more.
to you?
Let me
Awesome.
let me say a little bit more about that. That's a great question. Remember, we do 3 products: purchase, refinance, and home improvement. On the purchases, and you could appreciate this as a realtor, time is of the essence.
Yes.
So we want you in front of the loan officer yesterday, especially the market we just came out of. Right?
Yes.
And so we raise all these funds. We got the foundations to guarantee the loan pool.
Okay.
We created the relationship with the city to help fund the matching grant.
Okay.
But we're not a bank. So we went out and got a partner bank, in this case M&T.
Awesome.
But
And
you
they're
can't go to
local.
M&T to get the application.
Okay.
You have to come to that office right there.
Okay.
Where a gentleman who works for M&T works on our program exclusively.
Wow.
So for you, the borrower, it feels like an M&T loan, but when your loan closes, M&T's not really the real lender. We say healthy neighborhoods because it's like 5 banks, of which M&T's one of them. Truist is another. Orrstown, Howard, CFG are our other banks. And every time a loan closes, it's broken up into that many pieces.
Wow, that's
That each
awesome.
one of those fund a part of it.
Yeah.
But it would really be onerous to, if you thought your payment had to go to
Yeah.
5 different banks. M&T processes it and services it like it was one of their loans. Your payments are always made to M&T, but it ends up paying all those banks.
Okay.
And that's behind this. And there's no mortgage insurance. This product I'm talking about,
There's no PMI.
there's
Wow.
no PMI. That's what I quickly went over. When
So-
we raised the money for the loan pool from those 5 banks I mentioned, we also approached foundations in the city of Baltimore. Abel, Weinberg, Goldsecker, and who am I forgetting? I'm forgetting someone. And even the Maryland Housing Fund has a small piece where they guarantee the top 10% of the loans we make. So you don't have to get traditional private mortgage insurance.
Wow.
It's there for free.
So that's a huge cost
That's a huge savings
to a buyer.
That's a huge
you know,
savings.
because a lot of the time with PMI on some
Mm-hmm.
of these loans, it could increase a buyer's payment up to $200 more
Easily,
than what they
depending on the size.
anticipated. Yeah.
And don't forget, FHA you have PMI, that's private mortgage insurance. MIP, the mortgage insurance premium for FHA, is an upfront premium plus a
Yeah.
percentage in the monthly PITI.
Yeah.
So I hope we're not getting too technical.
Yeah, and then what I'll do is later on I can break down some of this information for you guys, so then it makes it a bit easier.
But that is a savings.
Yeah.
And since we're mentioning that, let's talk about, okay, so here's where you would go, our loans. And there's the purchase rehab, learn more. And here's the other part that picks up on this issue. Why is it taking so long? Oh, shucks, what's happening? It gives you a sentence that says, in addition to no no PMI, we're always 1% below the Fannie Mae 60-day price. So whatever
Wow.
Fannie Mae's quoting for a traditional 60-day price, we are 1% below that, but never lower than 4%, which made a difference in 21 and 22. Here we go. There it is. It popped up.
So also,
See the bolded 1% below the Fannie Mae 60-day? And
that's awesome. It's available at no
and
cost.
see no private
nothing
mortgage
by-
insurance. And then the
Wow.
architectural, I mentioned the architect reviews every renovation proposal prior to application. His review is no cost to, we pay for it, but there's no cost to the buyer. And he can actually consult. Because what this also means, since we're driven by location, not product, as long as the house is in one of our partner neighborhoods, and I'll show that in a minute again, it could be one dwelling that has 4 units,
Oh wow.
or 3 units, or 2 units.
So
We don't have a preclusion to that as long as the borrower occupies one of the units. It has to be owner occupied.
So that's
period.
phenomenal for so many of the younger generation that's
Mm-hmm.
out right now. They've been doing a ton of house hacking. So
Mm-hmm.
if you want to use that house hacking strategy, then this would still be a phenomenal loan for you.
Mm-hmm.
And what it does is it stops that homeowner from going through, since one
Mm-hmm.
of the stipulation is that you cannot own other
Other
property.
properties, and thank you for bringing that up.
Yes. So by having that rule set in place, then that still gives this
Mm-hmm.
buyer the potential to still be an investor on the side.
Of sorts.
Of
2
sorts.
caveats. We don't like that word, not that investors are bad, but that's what we're trying to be careful they're not.
Okay.
Two caveats about the multi-unit dwelling, okay? It's got to conform with zoning,
Okay.
okay? In Baltimore City, it's not uncommon in those 2 neighborhoods we mentioned earlier, like Howard Park, where they're big houses.
Yeah.
Liberty Road is an example. Lauraville similarly.
Yeah.
So you
Or
bought
even
it as
like
a single.
Reservoir
You
Hill
bought it
there,
as a
too.
single family 50 years ago.
Yeah.
Then you get in the house and you subdivide it. No problem. You even have 4 meters from BG&E.
okay.
But you never went to the zoning department to get it changed
Can't
to
do
a
it.
4 unit. So not a problem while you're living there. It's a problem now that you want to sell it. Because not only healthy neighborhoods, but lenders won't fund a particular transaction on a house that doesn't conform with zoning. So that's the caveat. It's got to
Okay.
conform with zoning. And and that's not a big deal because you don't want to get involved with that.
No.
The second thing is that, and this is unique to healthy neighborhoods, a little more conservative to what M&T, if you went to them for their regular product or another bank. If you're buying a multi-unit house that you're occupying, you cannot use the rental income from the other units to qualify. You have to buy the house on your standalone income.
Okay.
It doesn't mean you can't get all that income later. It's just that you had to be able to buy it on your own with us. That's one of our requirements.
Okay.
So that's different. I think if you just went to straight M&T, I think my friend Carlton would tell you their product, which is going to be higher rate and more mortgage insurance, and no matching grant,
Yeah.
would be willing to allow you to count based on some vacancy ratio, maybe
Yeah. Like a
85%,
loan or
85% of what the
Yeah.
rental leases you could provide could be counted towards your income stream to help you buy the property.
Okay.
But in our case, you got to
It's
stand
not.
alone.
Yeah.
It still can make the money on it, but you just don't get the help. It can't help you qualify to buy the property.
Yeah.
So as I was talking, I don't think we did it while we have been filming, but the neighborhoods, we're not in every neighborhood. And I mentioned we're in not the most affluent, and we're definitely not in the more challenged neighborhoods. And here they are listed alphabetically from Able all the way down to Waverly at the bottom, I believe.
So if you can't see this website, the website is actually healthyneighborhoods.org, and we will put a link in this video so that you're able to actually go to the website and learn so much more about the program.
So some neighborhoods like Mondawmin, there are targeted blocks. And as an example, if we look at Bryant Avenue, that means any address that's 2000 to 2199 qualifies.
Okay.
2200 Bryant Avenue doesn't. 2300, 1900 do not, with one exception. And this is the exception throughout our neighborhoods that have targeted blocks. Because we are a neighborhood mission-driven nonprofit, we care about the vitality of the neighborhood. So if there's a distressed property on Bryant Avenue that, for instance, was the 2400 block of Bryant, which is not targeted, so the normal answer is no, it's not qualified. It's automatically qualified because it's distressed. Because the worst thing to affect values in a neighborhood is to have a vacant, distressed property.
Wow.
So vacant to value houses. In fact, distressed is pretty much any kind of house. It's more of a legal description than that falling down, haunted house looking version that people pop in their mind. Sadly, it means the owner of the property ran into problems.
Okay.
And the bank took it back. Fannie Mae took it back. FHA took it back. VA took it back. The city took it back. State took it back. It's REO. There's the one example where the buyer might still be there would be a short sale. We do so short sales and any distressed property, even though it's not targeted, would be eligible.
Okay. And REO actually means real estate owned, and it's just the foundation of it is just that the bank owns the property. That's
Right.
So short sales, foreclosures, all of it would fall under that same bracket.
Right. And so there's about 50 different neighborhoods listed alphabetically here. 30 to 40 of them approximately, that I don't know the exact number, look just like this, where there are targeted blocks. But we go one more down. Oh, that's the same. Let's see how far we have to go. That's the same. But
Remington, I know Remington is probably.
But Mount Vernon might be a great example.
Yeah.
Oh, it's targeted too. God, I haven't looked at it in a while. Let me give you one. Let me go to one I know.
Or Patterson Park.
Patterson Park.
Yeah.
You hit it perfectly. It's the entire neighborhood. And there are no neighborhood boundaries where we have. Let me say it differently. Our website doesn't have maps.
Okay.
It's this process. What it does have, for instance, is something we borrowed from the city, a link to their site, Housing and Community Development, called Code Map.
Okay.
Okay. And I don't mean to. Give me any address.
Let's see. Here, we'll use one of my listings.
Okay.
864 South Macon.
864. Can I type? Okay.
Yeah.
South Macon, right? Street, Avenue.
Street.
There it is already. See it already?
Yeah.
So we do that. And we click on the button. I have the wrong address, evidently, but it's still close enough. Greektown. Guess what? If you cross-reference that with our website, Greektown's one of our neighborhoods.
Oh, phenomenal.
So you see how it works? So I don't know every address. I'm more the finance guy.
Okay.
So when you call me and I don't recognize the address immediately, there's some addresses Shannon Drive is Bel Air Edison, and something else in Reservoir Hill that just ring true in my brain immediately. But I never would have guessed or known where Macon was. And so I've even asked borrowers, what neighborhood is it? And they go, I don't know.
Yeah.
So this is where I go right here, and this is indisputable. In other words, the realtor called it that. I'm sorry. This is what the city of Baltimore Housing and Community Development calls it.
Yeah.
And that's our deciding factor.
And
So you then cross-reference that with the other site I just showed you, where we listed the 50 neighborhoods. Alphabetically, Greektown is there, and so therefore it's eligible. And you just pull that out of your hat.
Absolutely. And one great thing for real estate agents out there, once you're watching this, Code Map is an option for you to use for your own listings
Right.
because I know so many agents who will mark a Fells Point property as Canton.
Thank you. Great
or
example.
Brewers Hill as Canton because
Yeah.
the lines are
One
so
block
blurred.
away is not,
Yeah.
and definitely the comps for Highlandtown are very different for the comps in Canton.
Right?
You know,
but it's like right there, like as you.
You just walk one block and you're in a different neighborhood for sure, and it's
Yes.
priced differently with different attributes. So, but you're right. That's the
Absolutely.
absolute deciding. And interesting. Look at all the other stuff it gives you. It gives you the block, what it, who the owner is. In fact, I wonder why
And
it
this
didn't pick up the address I was looking for.
But
I
this
typed
is
it in
even
correctly, didn't I?
better. This
Oh,
is
you know
even
what?
better because it actually gives you the permit website
Mm-hmm.
as well and what permits have been pulled on the property. So buyers, as you're out there, please use this website to find out if permits were pulled on your home because quite honestly, that is a huge issue that we're coming across right now.
Mm-hmm.
But
So you can see, and just to go back and do that, where was it?
it was
Maybe I'm
Greektown.
trying to. There
Right
it
there.
is. Uh-oh. Oh, but
So-
look, it is. Ooh, that one.
So-
I just misspoke. Because guess what?
Ah.
Unless that house is vacant,
It's not.
you
It's
see,
new
you see what I'm getting
construction.
at. So you can see there's the example that
Yes.
makes it. It's got to
But-
be between those addresses. Had it been a neighborhood where it's the entire neighborhood, it would have been okay. Now, clarification. Remember, you're a realtor, so you're looking to sell properties.
Mm-hmm.
We also have the product that does home improvement loans.
Awesome.
So that person bought that house, and maybe it was even developed and really done, but they want to add a deck.
Ah,
They could come to us for a home improvement loan.
phenomenal. Phenomenal.
And they still could get the matching grant if their income doesn't. Oh, you know what? I didn't show that, by the way. Let's go back. I keep referring to the fact that our loans offer a potential matching grant. They do. See, there's the purchase rehab stuff we were talking about. But right below it, in combination with our purchase rehab loan,
It's a $10,000 grant
okay,
that accompanies it.
exactly. And if you want to know who qualifies for it, first it's got to be, I'm doing a horrible job. First it's got to be in the neighborhood. So that's the first half, and that's easy enough because Macon was in Greektown. Oh, there it is.
So there's
That's
our
not a
income
very
limits.
low income limit. A
Which is
one-person
great.
household is 97.5.
Yeah, so that's phenomenal
That's-
because that's something that a lot of other buyers
Mm-hmm.
will face, like especially with buyers who are transitioning from areas like DC
Mm-hmm.
where they have higher income limits.
Mm-hmm.
You know, this would be a wonderful program for them.
Okay. And remember, that's an incentive for the rehab. But what about if they also work for the city, $6,000, or Johns Hopkins? So in other words, this is what you can still, beyond this, stack other incentives that the house might be eligible for.
Phenomenal, phenomenal. So a few of the things that we've learned today about the healthy neighborhoods. So there are specific neighborhoods that you can find on the website that will give you
Oops. Well,
Yeah, so
I
right
just
here.
meant to go back to this, but
awesome,
that's still, and you can see there it is. There's the home improvement loan that I was talking about.
awesome.
There, right above that is the refinance rehab. Special purchase is where, remember, we're about renovating it. So suppose you're buying a house that already has been renovated. It really doesn't need another thing. There's nothing wrong with it. We would normally say you just have to do something else to it, like maybe add a deck or a parking pad or do some landscaping. But this is a mechanism that allows a developer that we've already kind of looked at in advance, because we care about quality construction. Again, we don't want just price, we want something substantive. That's how you raise values. That's how, if the mission was your house being worth more 20 years after you bought it, like it is in the surrounding counties, substantive renovations make that difference, not just window paint here and there. So we work with, we have worked with developers
Great.
that as long as we have comfort with their product, the quality of it, they can use our product to just purchase and not do a renovation. Keep in mind, they don't have to, they won't get a grant because it's a renovation grant. Now, granted, to do that, here's a key thing. number 11, the developer must be pre-approved, and he pays a point. But that's still to take advantage of a 1% below market today with no mortgage insurance.
Awesome.
You don't need the renovation component because you already renovated it. But the buyer could still do more. And remember, all of our buyers, all of our clients are owner occupants.
Yes.
So this is not to the developer. This is purely only to the person that's buying the developer's product.
Okay, then that would be a phenomenal product to match with this developer that I'm currently working with, who does blocks of rehabs. So that would be pretty
That
cool.
would just have to be something we talk about in advance.
So we would have to chat about that part. So now we'll go ahead and close out. And if you do have any specific questions about the Healthy Neighborhoods program, you can actually reach out to Ron here or use the website healthyneighborhoods.org. But Ron, so tell us how we would reach you.
Sure. I was just showing that number at the bottom. I used to have my name in red at the top, but I guess it changed. I can be reached at 410-332-0387, extension 1005. Or we're all healthyneighborhoods.org. So my first initial R, Barnes, at healthyneighborhoods.org. If we're in a rush because you've got a sale that's hot to trot, and I mentioned we try to get you to our loan officer ASAP. He has that same phone number as I provided you earlier, 410-332-0387. But Carlton's extension is 1008, the loan officer that's an employee of M&T that works on our program exclusively.
Phenomenal.
So that would help you if you were trying to get a pre-qualification letter or a pre-approval letter to accompany your offer to the seller.
Yes.
So,
Awesome.
because time is of the essence sometimes when you're bidding against other folk.
Absolutely. So thank you so much for watching this today. So you can actually hit that subscribe down at the bottom, or you can reach out to us through Instagram, lauren.DiMartino, or you can give me a call, 850-381-3888. Have an amazing day and chat soon. Bye.
Take care.